Welcome, everyone. We'll go ahead and throw the chat up there. Go ahead and drop a comment in the chat when you pop on, and we'll wait just a couple of minutes to get started here. Let everybody have a chance to jump on, and let us go live on all the different platforms. So everybody hang tight with us for just a minute. All right. Thank you, everyone, checking in. Good morning, Julio. Good morning, Amanda, Dan. All right. Everybody popping in. Good morning, Taryn. Jason. All right. Just give us just a minute to go live on all the different platforms here. So everybody hang tight for us. All right. It looks like we are good to go. We are live on all the platforms, so we can go ahead and get started. We'll take the chat off there and we can get into it. So, welcome everyone. My name is Kyle Hiersche. I'm the COO of the Mortgage Calculator, joined here by our president, Nick Hiersche, and our sales manager, Jose Gonzalez. We are a correspondent lender that specializes in non-QM loans. One of those non-QM loans that we specialize in is residential mixed use loans. And this is something that most companies do not offer. So we're very proud to offer it and work with our different investors. So what we're going to do here today, like we do every day, is go through the rates for today, the actual live rates, so we can compare it to yesterday and see what the market is doing. And then we will go into our deep dive, which today's topic is going to be our residential mixed use loan programs, which are very unique and we love to offer them to our investors. So before that deep dive though, let's go ahead, Nick, and let's pull up the rates. Today is April 11th, just after 11 a.m. So the rates are live. We can go ahead and pull those up and we will get into it.
All right. Thank you, sir. Let me go ahead and switch my screen and we'll get started. So this is our pricing tool, as Kyle mentioned, for our team of mortgage professionals. We have over 300 loan officers licensed in 22 states for primary second homes, and we could do our business purpose and today's topic, our mixed use property loans, etc., in about 44 states, so pretty much every state out there. So please get with our team if you'd like a quote. This is just going to show our pricing indications with the rates today. As Kyle mentioned, it is April 11th, just after 11 a.m. Eastern time. So our program rates are live for our general info. We're going to check out the general rates. If you'd like a full loan estimate with all the details broken down, please get with our team. We'd be happy to provide that for you. So for our live example, we're always going to set up a basic scenario, 400,000 loan amount. We're going to slide this up to 80% LTV. That means 80% loan, 20% down payment. Desired price is 99. That means we're going to tell the computer find the best rate at one discount point in cost. Most of our customers are asking to buy down the rate a little bit in this environment, so that's our typical request. For our loan types, we're going to go through our conforming conventional examples, then we'll check out our FHA rates as we do every morning, and then we'll go into our non-QM, aka expanded guidelines, where we have over 5,000 additional loan programs that use alternative income. We do not do the VA or USDA live. Remember, VA is only for our eligible veterans. We appreciate your service and we'll be happy to quote it, but since not everyone has served, we don't do that live. And same with USDA, that's only for eligible property that's in a rural USDA eligible area. So if you're shopping there, we'd be happy to quote it, but since not everybody is, we do not do that live either. So let's start with our first example, conforming conventional. We're going to do a purchase 30-year fixed loan, pretty standard. Primary occupancy, single family, 1 unit, state of Florida, county of Miami-Dade. And for all of our examples, we use an estimated FICO of 760 and an estimated debt to income ratio of 40. So these will be our parameters for all our examples today. Now, let's check out our rates this morning. Just about the same as yesterday. Not much movement here. We have a 6.5 rate for 0.875 discount points in cost for a final APR of 6.672. So not bad. No movement is often good news. And remember, these rates are about as low as they've been in the last 6 months or so. So again, we love to see the recent movement downward, and we're staying there. That's great. Remember, we're always going to compare APR across programs, so you can compare all three examples for these primary home purchases using the APR. So remember the APR for conventional, 6.672. Now let's go back to our tool here and set up the same exact scenario. And this time we'll use FHA. So everything else will stay exactly the same. And let's compare our FHA rates for our customers who may need an FHA program. Remember, FHA does allow us a little more leniency on debt to income and credit as well. So the best option here, 5.625 rate for 1 discount point in cost and a final APR of 6.227. So remember, compared to conventional, even with the upfront and monthly mortgage insurance here on FHA, we're still a little bit actually cheaper in this scenario. So when you compare APRs, 6.227 to it was 6.5 something, I believe, for the conventional. Great options there. Definitely recommend our borrowers out there shopping. Compare FHA with the recent changes. It is improved. Now let's go to our final scenario. Now, if a customer doesn't qualify for any reason for conventional or FHA, many other banks and lenders don't have any other options. Fortunately, here at the Mortgage Calculator, we have over 5,000 additional loan programs under expanded guidelines, aka non-QM. So if we keep everything else the same, we do get one additional option now when we select non-QM, and that is our income verification type. So typically, full doc would mean 2 years of tax returns. That's what conventional and FHA require. So typically, we choose a non-QM program to use alternative income, such as 1 year alt doc, 2 year alt doc, asset programs using business bank statements, investor programs. We can use DSCR. We'll talk about that in a minute. Our most popular program, though, for a non-QM primary home is going to be our personal bank statement with 12 months of bank statements. And that's going to be for our self-employed borrowers. Remember, many times our self-employed borrowers, when they file their taxes, have various write-offs and oftentimes have trouble qualifying for a home at all or qualifying for enough income of the home they want to purchase. So in this case, instead of using 2 years of tax returns, we're simply going to get 12 bank statements and determine a debt to income ratio of 40 using those 12 bank statements and their actual cash in their bank account. So typically that allows us to qualify a self-employed borrower, in this case, for a lot more monthly income and therefore a much larger loan amount. So let's check out our non-QM rates this morning. So again, looks about the same as yesterday. So 7.25 rate, the top option here for 0.75 discount points and cost, and a final APR of 7.322. Remember, we compare APRs across programs. So remember the FHA was in the low sixes. The conventional today is in the mid sixes. And very comparable here is our non-QM bank statement programs in the low sevens. So we love to see those line up. Definitely recommend customers out there shopping, compare all three different options. Now, our team can navigate you through here. Notice there's hundreds of different flavors of these bank statement programs. Some of these things may allow things like a bankruptcy or a foreclosure. So please get with our team. They'll find which program fits best for you. Now, for our final examples, before we pass it over to Jose, we're going to pull up our quick pricer here and switch it to investment properties. So every morning we always want to check out our rates for investment properties. And we're going to set up the same scenario, 80% loan, 20% down payment, and we're going to compare our two options here, conforming conventional options with our expanded guidelines, aka non-QM. Remember, FHA, VA, USDA are not eligible for investment properties. So our first example here for an investment property purchase using conventional, we'll set everything else up the same as we've had on our other examples, and we'll compare investment property purchase. Now, keep in mind, Freddie Mac and Fannie Mae, the GSEs that operate the conventional programs, have added basically penalties, loan level price adjustments for investment properties and second homes. So you do see that the computer was not able to find an option for 1 discount point in cost. So the best option the computer found was a 6.75 rate for 3.25 discount points and costs, and the lowest APR option, obviously the computer's looking for the lowest APR option, of 7.001. So great options here for our borrowers that qualify for conventional, but many of our investors would rather deploy this, in this example, $13,000 in discount point costs into another investment. So many times our investors are asking us for a higher rate option to lower the discount points. So here you'll see the computer as we go down. There's a couple higher options here, 7.49 for 2.625, but that's still a lot of money. So many times our investors want other options. And that's where we love to compare our non-QM options. So let's go into our final example today. Set this to investment property. Set this back to 80% LTV. And our final example is going to be non-QM investment property. Now there are two options we must select with this. First is our income verification. And as we mentioned, our most popular program for investment properties is going to be our DSCR program. That is because it doesn't require any income verification. We're simply going to use the estimated rental income from the property to determine if that covers the expenses of the mortgage, the PITIA of the mortgage we're looking at right now. So if the estimated rents will cover it, that's a ratio greater than 1, and we have a ton of DSCR programs for that. And we even have a few options for properties that don't quite cash flow at a ratio of less than 1. So you'll see here, there's a ton of different options here under the DSCR umbrella. Now, the final thing we have to select is a prepayment penalty. We always choose 3 years every morning. If you've watched the show before, that's our standard. We can choose 0 if we prefer. That will cost more money and will limit our loan programs. So we don't select that in our demo. We can also choose 5 years. That will save us a little bit of money, but will also limit our loan programs. The most common option is 3 years. So that's what we do in our demo today to compare the most options. So for our final example, let's check out our DSCR rates this morning. So we love to see these rates in the 7s. It's been quite a while. So these are going down as well, along with the conventional. Best option here for this DSCR at the top, 7.625 rate for 0.975 discount points and costs, and a final APR of 7.705. So remember, the APR for conventional was just over the 7s. And here in the mid 7s is the DSCR, with a lot of benefits that come with that. No employment, no income required. Our investors can do 1, 5, 10 loans at the same time to refinance a couple properties, purchase more properties with the DSCR program, because there's no employment or income verification. We can do multiple loans. So very flexible here. And of course, my first example was lower discount points, which was the main goal, to save cash out of pocket. So definitely recommend our investors out there compare DSCR to your conventional programs. You will be pleasantly surprised. Now, for our topic for today, let me go ahead and switch my screens and introduce our deep dive. So as Kyle mentioned before we started, our topic for today going to be on mixed use property loans. So we use our DSCR program. Again, we did this episode yesterday on our multi-unit, right? The small commercial 5 to 8 unit small commercial properties. Similar program here we can use for mixed use properties, 2 to 8 units mixed use. Has to be 2 because to be mixed use has to have 1 residential, 1 commercial, right? So that would be the minimum of a 2 unit mixed use, because each unit has to have a different use, all the way up to 8 units of mixed use. So that's what we're talking about today. We're talking about a small commercial property that will still use our DSCR programs, which are much easier for everybody out there to understand and figure out, compared to the traditional commercial programs that we used to have to use for these programs. So we love to offer the DSCR. You guys just saw the simple version of the DSCR. Now Jose is going to explain the more complicated version of the DSCR, where we still use the amazing DSCR program, but for this, what would be traditionally a commercial property. So you ready there, Jose, to take over?
Yes, sir. Good morning, everybody. Thank you for joining us for Daily Rates Live with the Mortgage Calculator. This product, little bit, some people, can't totally come to grips with it because it is a very outside the box product. The first thing that we should be aware of is that one of the big benefits of this, I would call it a hybrid type mixed use product, is that it does not have the zip code restrictions that you're normally going to find with mixed use products at your commercial conduits. Most of you, when you are shopping around for options for this type of product, the first thing they're going to ask you is what's the zip code. They're going to run it through the map and see if the population density is too low, because commercial lenders always want to worry about the population density of the area. A lot of times they don't even go past the first 5 minutes of the conversation when they'll tell you, nope, sorry, there's only whatever 10,000 people per square mile or whatever it is that could be in the area that you're looking at, and that may be too low for what they usually want to do. This option treats it more like a residential DSCR, where they cannot discriminate on those bases. So no issues there with zip code. However, you do, like any other loan, have to be concerned if the appraisal describes a property as rural. Okay, if it is a rural property, then you're going to have to look into the guidelines to see what the workaround is. Normally, the workaround is going to be comps can't be more than 3 miles away from the subject. You can't have a gravel or dirt road in front of the subject. That would be two of the biggest disqualifiers if you're trying to find a workaround for a property that the appraisal has coded as rural. Right. So in our mixed use product here, at least 50% of the property needs to be residential. So you got to have, if it's a 2-unit, for example, this is for applicable from 2 to 8 units. This product is, if it's a 2-unit, then obviously you need 1 unit residential, 1 unit mixed use or commercial, but it cannot be more than 50% of the total area of the structure. And there are certain requirements of, if you have 4 units, at least a certain number have to be residential. So you would have to refer to the chart. But it is a very good product here because it basically brings us DSCR. This is a DSCR product, but it brings us rates at about what you're going to be seeing for standard DSCR options. So I am showing you here multiple LTV and credit score options. So for our first option here, it is 75% loan to value, which is the highest loan to value for this product. And 740 is the cutoff at which they do start adding loan level price adjustments. So this example we have here is for a $500,000 purchase price, $375,000 loans. Keep in mind also, all of these options, the 2 to 8 unit mixed use, as well as the 5 to 8 unit residential that we did yesterday, do require a 5-year prepayment penalty. There's no other pricing options if you do not select 5 years on the prepayment penalty. So here we have 8.875 as the lowest cost option and 8% as the lowest rate option. So this is 75% LTV purchase with a 740 credit. So now to show you a little bit of variety here, 70% LTV, same credit score. So we do see a drop in the cost. I'm going to put the other one here a minute. So just so you could compare, it was 8.875 and 8.75 was costing $2,250. On this one here, 8.75 is giving a lender credit of $963 with our lowest rate option, 7.875. And that is at a 740 credit score, 70% loan to value purchase. So now we're going to drop the score a little bit more, right? 680. We get a lot of those 680 credit score borrowers coming around. So we can do this option at a 65% LTV with a 680. There are other options with a 680 to go to a 75, but I will let you know that the rate on that option is about 12.25%. So This is the best option here. 680 credit score, 8.875 is actually giving a lender credit of $81, and our lowest rate option is 8%. Again, this is 65% LTV purchase with a 680. And now we even have a 660 credit score option. And look at those rates. And again, this is 660, 60% LTV. Yes, a little bit lower on the LTV, but still look at the great rate options. So for your borrowers that could have some challenges where you analyze for a rescore, you did a credit simulation, there's no way you can bring them up to at least a 720, which is the cutoff for 75% LTV for this program with the best rate option. So you can do 65, or with a 660, you can do 60%, and we still have a lender credit of $825 at a 9.5% rate with our lowest rate option of 8.5%. So now we have our best option cash out. Max is 70% for this program, 70% LTV with a 740 or above. And again, very good rates here. 9.125 is giving you a lender credit. We're seeing a few lender credits out there. Lender credit of $88 and lowest rate option of 8.125. And this is for a 70% LTV cash out with a 740 credit. And then our lowest FICO score option with these good rates is 700 FICO score, 60% loan to value for a cash out refi. And again, amazing rates. We're getting, again, I'm loving those lender credits that I'm seeing. $75 lender credit at 8.75% rate. It was not until recently that, we weren't having too many lender credit options here, but here we are. Rates are dropping in the non-QM world. And our lowest rate option, 7.875 at a cost of $85.50. So good options here for cash out. Again, this one is 60% and this one is 70%. Now, there are other cash out options at a 680, but again, it's going to be the same options that I mentioned to you at a 680 on the 75% LTV. It's going to be over a 12% interest rate with a cost of about 3 points. So here I'm showing the better options, and it's always recommended that if you do have a borrower with a little bit lower credit score, run a credit simulation at the mortgage calculator. We have credit simulations possible with all of our credit reports, right? So as soon as we pull your credit, we'll immediately jump into a credit simulation to see if we can better your scenario 20 or 30 points, possibly putting you into another plateau of options like this. So we do not want to discount any opportunities that could be out there to give you the best rate possible.
Awesome. Thank you, sir. I don't think we have any specific questions. If you guys do have a question, please drop it in the chat quickly, and Jose can address it. I know these are confusing. Hopefully you guys get an opportunity to take advantage. I noticed someone said Miami loves mixed use. I do have one that just applied 2 days ago for a mixed use, shopping for mixed use this weekend. So definitely popular in Miami. It's definitely popular in a lot of other areas as well. In the Midwest, they do have a lot of them as well that we're getting. Definitely done a few of those as well. Do we pay for credit simulation? That's a question here. Jose just mentioned it. So every application we get at the mortgage calculator includes a credit simulator. So any of our LOs can access that as soon as we pull the credit report. So definitely, as Jose said, we recommend that everybody takes a look at what we can do to bump them up, as Jose mentioned, all those different levels.
All right. I don't see any more questions, so I think we can go ahead and wrap it up. Great topic here. Again, we specialize in non-QM programs, just like these programs that Jose went over. So if you'd like to get an actual quote for your specific scenario, or just connect with one of our loan officers to walk you through, you can go ahead and visit us at themortgagecalculator.com, and we can pair you up with one of our loan officer consultants. Or you can send us an email, info@themortgagecalculator.com. We have over 300 licensed loan officers in 22 states. And these loans that we're talking about today, the business purpose loans, we can do in 44 different states. So almost every state there, we can help you out. So go ahead and check us out, themortgagecalculator.com. And we do this show every single weekday at 11 a.m. Eastern time. So you can check us out every day. We go through the rates, see how they fluctuate, see how they compare to the day before, and then we do a deep dive into a different topic, just like we did today with the mixed use properties. So thank you, everybody, for tuning in. Thank you, Nick. Thank you, Jose. And we hope to see you all at 11 a.m. Eastern tomorrow. Everybody take care.
Thanks, everybody.
Thank you, everybody.